Good morning. This is the weekend update for Buy Sell Short for Saturday, March 23rd. We ended the week, actually, considering all the negative headlines out there regarding Europe and Cyprus and whatnot, market held up pretty well this week, albeit on lower volumes. But again, that can also be viewed as somewhat bullish. Looking here at the daily chart, you can see that the Dow has fallen into a pretty tight trading range, this little rectangle. The last time we had a rectangle, it ended up going on for about 3 weeks before we broke out to these new all-time highs. And now we find ourselves week 2 in the middle of this even tighter trading range. Support right now, as you can see, the 20-day exponential around 14,330 to 14,400 is the support. And we've got some nice potential upside. We do have the Cyprus, what's going to happen with those guys possibly coming Sunday or Monday. There's a Monday deadline for them with the ECB or the Europeans to come to some sort of deal. The market believes that a deal is going to be made, and it's hard to really ignore what the market says, because you recall when we had these other pending crises over the last few months, i.e. sequester, debt ceiling extension, the market kind of just dipped a little and then rallied, expecting it to get resolved, and it did get resolved. So the market is sort of not really selling off on the news. Now, if we do get some bad news or surprising news or no deal is made, we could see some decent downside. I mean, we've got the 50-day moving average down here at 14,000, and that would likely offer the first support level if we did get some sort of surprising news out of Europe. Quick look at the 15-minute chart. As you can see, we've been slowly moving higher. RSI bounced off the 50 level. Stochastics also bouncing up through 50. So, the charts suggest upward momentum on Monday, but of course, news trumps all charts. So it's really going to depend on what news flow comes out of Europe this weekend. Quick look at oil. After that little dip back, you can see oil is consolidating here right under the 50-day moving average. We've also got RSI consolidating at the 50 level. We've got stochastics looking like they want to bounce back. So the oil chart here is looking for a reason to go higher. And as we've mentioned, that has been supportive of the market. As long as we see some small moves up in oil prices, that's been reflected in higher prices in the overall market. Now, what is surprising, one of the indices we've been talking a lot about lately is the Dow Transports. Essentially off the Dow theory, how the transports go, the Dow goes, and how the market goes. As you can see right here, we've got this big uptrend line support in the Dow Transports going back to the November bottom. And each time we see a sell-off in the transports, if we flip over to the Dow chart, you can see a corresponding sell-off in the markets. And each time we bounce off the 20-day exponential and continue to move higher. We touched the 20-day exponential on Thursday, dipped below it, got to that uptrend line, looked like things were going to get pretty bad. We had higher than expected or higher than normal selling volume. As you can see on the Dow Transports, we had a pretty negative advanced decline ratio as well on the overall indices. But on Friday, we were able to get that bounce back. We have RSI bouncing up off the 50 level, stochastics still above the 50 level. So this is an index we need to watch pretty closely on Monday and Tuesday. And if we continue to see an upward move on the Dow Transports, then it's going to reflect positively on the overall market. Quick mention on the Russell. It's gotten pretty tight here on the Russell over the last few days. And we continue, just push to all-time highs, it seems, on the small/mid-cap stocks here. But anyway, let's jump into some stock plays. We were in the enviable position of not being in a whole lot of plays right now, which I believe is great given the uncertainty that we have in Europe, even though the market seems to be shaking it off. Around uncertain market times like now, I really like being high cash, and we're seeing some excellent momentum on an intraday basis, so we're able to jump in and benefit from those movements while not taking a whole lot of stocks, swinging a whole lot of stocks overnight. So enviable position right now. We had a big winner for us on Thursday. IGC stock we picked up a week or so ago around 18, 19 cents, popped up to 35 cents. 100% gainer almost on Friday. A potential article from someone that gets a big following, but it brought the attention into the stock and the nice big bounce back. Consolidated a little bit on Friday. As you can see, we're probably looking for a break of 32 cents will be the next launch point of this, and targets are 42 and 58 cents, and I will be looking to accumulate, as we did on Friday, any dips around the 25, 26 cent area is the ad spot on this one. I know, pretty interesting action on this one on Friday. The real close, 54 cents. But the official close ended up being 58 cents. Someone picked up 200,000 plus shares right after the close at 58 cents. So it ended up being the 58 cent close. So if you see the stock down on Monday morning, that would be why. Got painted after hours when the real close should have been 54 cents. But the chart looks really, really good. Remember, these guys on their earnings report on Monday said that they expected data on their phase 2 Hep C drug by the end of Q1. Next week, the market is closed on Friday for Good Friday, so we really only have 4 days left for the end of the quarter, so we can get news anytime next week on this stock, and the chart looks ready to rock and roll, just like the last few times we played. RSI is about to break up through 50. We are about to get a positive MACD cross. Stochastics are under 20 and ready to curl up. These are all indicators and how we like to see them before we see big moves in the stock price. Now, just looking at a chart standpoint, the target on a real break of 58 cents is a move up to the 50-day moving average at the 66 to 70 cent area. That would essentially be a gap fill back to right before they announced the financing that they recently did. Now, if we get positive news, as we expect on the phase 2 Hep C drug, we could see a really big upside move on this one. So we're looking very, very nice on this stock going into the upcoming week. Mila got a very nice pop on Friday. We got right up to that 20-day exponential high today, 127. Pretty big volume. The sellers that have been capping this stock look to have gotten washed out on Friday. There was an SEC filing, an 8K, where these guys placed an order under a contract they have. Give you a little bit of quick background. These guys have a 3D scan that is used to detect melanoma, skin cancer, and they got approval a year or so ago. The stock has been decimated over the last year as the company gets things in place to actually sell their product, and the market so far has been disappointed. And that's usually the case when biotech stocks get their first FDA approval, and as you can see, the stock has just been hammered. This drop here was on the earnings report where people were just disappointed that they had hardly any sales. They really have only started to roll out their product. They're in about 195 dermatologist offices right now, but the 8K filing done on Wednesday, I believe, they placed a $3 million order, $3 million worth of their equipment, and that equates to about 90 to 100 plus machines. So we can assume from that that they have a place to put them, the fact that they are ordering them, and that would double their installation base almost overnight. Very, very good sign. The way these guys make money is they sell the machines to the dermatologist's office, and then each time a dermatologist uses it, they get paid revenue from it. So the more offices their equipment gets put in, the more money they will make. Chart is nicely oversold, very bottomed. RSI is bouncing off 30. Over the last 3 days, we've seen increasing volume on this one. Positive MACD cross, stochastics in the basement, on-bounce volume curling up. These are all things we like to see on a stock poised for a rebound. 128 to 130 break, and we could quickly see a gap fill up there to the 50-day moving average at 154. Looks like we have rock solid support now at the 110 level, so looking very, very nice on this stock going into this week. Quick update on WYY. They actually ended up changing their earnings date or made it official of April 1st. So we had a nice bounce off the 50-day moving average on Friday. So going to be interesting to see if we can get that breakthrough 70 cents early this week. We could see a nice upward move into the earnings report in a week's time. Shippers were on fire again on Friday for the last 2 days. EXM 50%, actually what is that, 60% gain for us. Shippers are looking a little long in the tooth, but the momentum may continue. But we're going to continue to play these on an intraday basis. They're giving lots and lots of trades, and when that happens, we take advantage. Now, with the extreme strength we are seeing in those shipper stocks, Friday was time to spread out a little and kind of go for stocks that have a shipping angle. AMCF is a fueler for shippers, and nice little beaten down chart. We ended up getting a late day close right at the lows, but it traded as high as 69 cents on pretty good volume. So keep a really close eye on this one on Monday. If the volume comes in and it gets a breakthrough 65 cents, we could see a move up to that 80 cent plus area. Quick update on a couple of other charts. DRRX, similar situation as INO. Remember, Pfizer is supposed to give an update on their drug, Ramoxi drug, by the end of Q1. As I mentioned with INO, that implies, in the next few days, 138 breakout is the watch on this one going into this week. Also, Apple, you recall last week, we threw this stock out as a bottom play, looking ready to break to the upside, move to the 50-day moving average. 50-day was up there at, 570 when we made that call, and that's the reason why we mentioned the Apple April 475 calls. Those calls have gone up 100% over the last week. Very, very nice if you took advantage of it. And on Friday, we actually saw Apple close above the 50-day moving average for the first time since this downtrend began. So that can be viewed as pretty bullish. And, the reviews on the RIM Z10 or whatever it's called, that stock got hammered on Friday. No one's buying that supposedly. And that could be the upward momentum for Apple going into the next week. So looks like the trend really has changed. We nailed that bottom on Apple a week or so ago. And, this one could make a move up to the 510, 520, even up to the 550 area into their earnings report in April. So looking very, very good there. Last but not least, quick mention on APP. Very nice mover. Actually, let's look at a tighter chart here. 195 entry, we ended up getting as high as 212, so the first target of 210 was hit as a rule of two play. Got a little bit of a pullback on Thursday and Friday. Could see a dip before this one makes a run to the 220 area. I don't believe this stock is done yet. If we go back and look at the 3-year chart, you can see 219, 220 is the next target on this one, so we'll be watching this one like a hawk for an add or an entry in this upcoming week. So that's it for the video. Again, we're high cash right now, but we are in some very nice movers. We're watching a lot of potential plays, and the pop scan has been on fire over the last few days. So definitely check the pop scan out on a daily basis. There's usually a couple of big movers on that one from the buy triggers. And, we'll just see what the market brings us in this holiday shortened week that's upcoming and go from there. So have a great weekend, guys, and see you in the chat room on Monday.